if you look at counting day and how exit polls and counting day sort of, differ with each other, here's the data on the screen. Nifty 50 on counting day. Let's go back again, 20 years, 2004, when the exit polls had got all the predictions absolutely wrong and were expecting the BJP-led government to come back to the center under Atal Bihari Vajpayee. That did not happen. And see how badly markets crashed. Almost 12.2% decline on counting day. Compare that to 2009, and 2009 till then we had seen the scams of the UPA government come back. But this is 1 year after the financial crisis of 2008, the Lehman Brothers subprime crisis in the US, and with the UPA government coming back to power, markets had reacted positively on counting day, touching the ceiling almost, going as high as 17.7%. Cut to 2014, when markets were expecting the Modi wave, Ab Ki Baar Modi Sarkar, markets were expecting that, and that was already factored in, and that led to markets actually on counting day scale up only 1.1%. But cut to 2019, like you mentioned, after the initial buying frenzy, players actually book profits. Now, coming to your question, the FII data, I think that FII data is something that we would love to have Feroze's views on also. FIIs have been on a selling spree at least all of the last 1 month. If you look at the amount of FII inflows into India in all of the last financial year, from 1st April 23 to 31st March this year, we've seen almost 2 lakh crore rupees inflows coming into FIIs. If you just look at this financial year, 1st April to Thursday, which is last Thursday, 29th of May, almost 1/10 of that, 10% of whatever was the inflow for the whole year has already been sold. Now, it's a different story that domestic institutional investors and retail participants are continuing to play the India stock story. But Feroze, how do you read FIIs? Do you think FIIs had become jittery of looking at keeping their money in the Indian markets and had hence tried to book profits? And what happens from now? Are they really going to, come back come Monday and definitely counting day onwards?
If you look at headline numbers, now headline numbers generally hide more than they show. If you look at these 30,000 crores of exit, close to 29,000 crores of sale from FIIs, I don't think it is too much, point one. Now, why is it not too much? Because FIIs generally are very cautious. If you look at their index short positions, I have never seen that happen. 55 long, 45 short, 1 day before, next day you have 87 short. That's basically a hedging position. If you look at their overall long position and then you see these short positions, then you will have them in context. Actually, it's a good news. In the last 3 general elections, on the counting day, DIs have been net sellers. Only FIIs have been buyers, and they have always been a seller before the counting day because they're institutions. They like to not go with opinions. They like to have their hedges. That's point 2. If you want to see the exact confidence of FII or superficial investment in India, if that's the debate, the best way to calibrate that or the barometer is what is their exposure in Indian small caps. You would be surprised that in their small cap index, MSCI India small cap index, there are about 465, 67 stocks. Indians in India sitting have only 250 stocks. And if you look at the kind of ownership which they have increased over the last 1.5 years in the small cap space, very well knowing they can't sell it on a day, it's clearly an indicator that they've come into India not with hot money. People bring hot money, they buy the top 10 counters of Nifty because they can sell it within an hour. But if they're going to buy stocks with 10,000 crore market cap with 4,000 crore free float, and if they own 1,500 crores of that free float out of the 4,000, they know very well that this is long-term money. So FII's behavior, if you look at the headline number, may sound negative for this financial year, but I think the deeper numbers show great conviction, especially if you see the change in the small cap ownership and the extent of number of small caps which are there in the MSCI small cap index. I don't think anybody in India tracks that. Ironically, a foreigner has 215 stocks more in their India small cap index than the Indian mutual fund industry does too.
Okay, Feroze, I just want to come back to you. Something very interesting. You mentioned that domestic institutional investors have been net buyers on counting day. How do you explain that? Did you say net buyers or net sellers?
Net sellers.
Net sellers. Okay, so is it fair to assume that they book profits on counting day and then they reinvest on corrections?
No, what I would say is there's a very, very small numbers, but they're net negative. If you look at the counting day of 16 May 2014, there was 349 crores of sale. So point I'm trying to make is domestic guys sell, but those not very significant amounts. But FIIs have been buyers on counting day. That's the more important number, and a heavy number. 3,600 crores of buying on 16th May of 2014, 23rd May of 2019. There was 1,439 crores of buying. So FIIs generally go cautious before any uncertainty, is the point I'm making. And if they were actually not bullish, they wouldn't add 2 lakh 8,000 crores in the previous year. And of course, the domestic institution in the same period have bought 1 lakh crores. And I think this government continuing was very, very critical on one count, because India's momentum of Indian retail investing in India and the conviction was just building up in the last 2-3 years post-COVID. If there was a disruption, I think that would have created a dent in the paradigm shift of how India invests money. India invests money in debt. Foreigners invest in India in equity, which is very ironical. Indians have made not more than 7% weighted average return over the last 10 years with their asset allocation, and foreigners make 15-18% investing in India, and Indians invest only 7-7.5% in their weighted average return.